You can sell an in-the-money put, and you can buy out-of-the-money puts in a distant month. Same thing, same way that you did the calls, you could do it with puts as well. If you're bearish on stocks, you could do the exact same thing here, and just trade these so that it's very favorable. If you're wrong and they go up, you can make money, and if they go down, you can make unlimited money. So there's lots of ways that you can play this. Now let me put that back together in a portfolio view for you, and you can see, I have. If the market goes down, I make money. If the market goes up, I make money. If it stays the same, I lose a little bit of money. But I've got so many different trades going on at this one time that if I lose 50 or 60 bucks on one, but I make $300 or $400 on another, that's not too bad. If we take a look at the price slices here, you can see that I'm actually making money today, about 60 bucks. If I go up, I make a lot of money. If it goes down, I make money. But it doesn't matter. Either way, I make money. Now, let me talk about the risk before we leave here, and we close this out for the day. Now, the risk is that I've sold this Yahoo 1750 call. If I get assigned on that, what I'll do is I'll take those 100 shares that they're going to assign me. I will have to buy, or I will be short 100 shares of Yahoo stock because I sold that call. But I have those 3 October calls to protect me from any upside potential. In fact, I have unlimited upside potential on this trade. What I will do is I will go ahead and buy those back into the market, and then go ahead and roll that trade up into the August 1750, or maybe even the $20 calls. I will sell another call into August and keep my October calls. So that's my exit plan. My exit plan is, let's say nothing happens between now and the 16 days left in the July option. Well, if nothing happens as we get closer to this July expiration, if I don't really want to be assigned on those on that short call that I have, I'll simply roll it up into the August 1750s. And it's going to cost me another 30 cents, but you know what? That's not a big deal. I've eliminated some of my risk. Maybe I'll actually make a little bit of money on that and roll it up maybe for even money to the August 1750. I still have my Octobers out here, waiting to be profitable if, somebody makes an offer for Yahoo at $30 or higher. But I still have my unlimited, I still have my limited downside risk because I've shorted that one in the money call against the 3 that I bought out in October. So that's the plan. That's the exit plan. The plan is to hold these out. I will sell the near term in the money call if I'm looking for an upside pop on a stock. If it doesn't happen within the next week, I would say 7 to 10 days before expiration, when that gets down to a number 7, when there's 7 days left in the July expiration, I'll want to roll those up to the August 1750s and sell one of those, hold in there until probably the 3rd week in August. Now, if nothing happens by the 3rd week of August, potentially I could roll it up again into the October 1750 calls if I still think there's some potential in this trade. If not, I'll just close the whole thing out, probably for even money, or maybe I'll even make a little bit of money. But you know what? It's such a low risk trade that it doesn't matter. I mean, you can just kind of let these things go, kind of keep an eye on them. Just make sure that, just a few days before expiration, that you roll them up to the next month. And I would do that a couple of times. I would roll it up maybe once to August. Maybe, since they don't have the Septembers up, you could roll it up from the August to the September when they put the Septembers up there too. So you could roll this out actually a few months. Maybe even make a little bit of money on the income that you're generating by selling these calls in July and August and September. So that's the plan. I think is a dynamic way to trade, especially when you put together a portfolio of these different kinds of trades. It doesn't cost you a lot of money. There's very little limited downside. There's very limited downside risk. There's very little risk if the stock just stays the same. And my maximum risk on all these trades is about $100. And you know what? Still have unlimited upside potential on these. So if I get a couple to pop up really nicely, make a few $1,000, and that's not a bad payday. And like I said, I'm only trading 1 to 3 contracts here. Hey, if you got a lot of capital and you got a big budget, these are the kind of trades that can actually, if they pop on you, you can make a ton of money. So hey, I wish you guys all the best. If you have any questions at all on this trade, feel free to review this video as many times as you want. Go through all the details that I just established for you, especially the entrance criteria, kind of setting it up to determine, what kind of profit and loss scenario you're looking at, and also how to exit these trades. Now, you want to put a time, like I said, you want to put a time limit on these trades. If you're getting close to the July expiration, get out, roll it up to August. If you want to give it a little more time. If you want to give it a little more time after August, roll it up to September. I wouldn't recommend rolling it, more than 2 or 3 months. At that point, probably the trade is diminished. The event's not going to happen. Yahoo's not going to get bought out. Just exit the trade at what little tiny loss, maybe $10 or $20 or maybe even you're making a little bit of money, like $30 or $40 in the trade, but you haven't really lost anything, but you got a position in case the stock does pop up. Finally, before I leave you today, I want to go through what I would do. I already had this one planned out. I had Yahoo planned out already. Let's go in. Let's say you don't have any idea what kind of stock that you really want to do this on. You want to be able to do this strategy, but you have absolutely no idea what stock people are talking about or anything else. Well, what you can do in the Thinkorswim platform, at least, and you can probably do this online too, is go to this is very good as well for earnings. Okay, think about it. These are stocks in the news, right? So anytime you feel like, hey, you've been hearing about a stock over and over and over again, and all of a sudden it looks like they're going to be coming out with some earnings. Well, this is a very good strategy to use for an earnings play. If you just take a look through here, you can see that eBay is actually going to come out with earnings on July 16th after the market closes. So let's we know eBay. eBay's a big stock. Has a lot of there's a lot of it trades a lot of shares. It's very liquid. It's got options on it. So let's go ahead and take a look at some eBay options and see if we can find something favorable. Now, we can't always find something favorable. Many times you take a look at some of the options, and even though most of the time you can find something fairly favorable to do this kind of trade with, you can't always find them. So let's take a look here. Let's go to the July, October. Let's keep an eye on the volatilities. The volatility is 51% here in July, which is good because that's the one we're selling. If it's a little bit higher volatility, well, you're going to get a little better price for those calls that you're selling in July, right? So that's favorable in one way already. The October calls are down around 42% volatility. The January 09s are down to 40%. But I think October is probably long dated enough. We could probably even, because it's an earnings announcement, we might even be able to go to the August. So let's take a look at a couple of different scenarios. I would start by taking a look at the August, and I would go out to the $30, which is just a little bit higher than the current price of the stock. Let's go ahead. Whoops, I don't want to sell those. I want to buy those. I always start out with 3, and then let's go with. Let me make sure we got our first trigger sequence on our advanced order tag here, and then we're going to sell one of the calls in the front month, which is July. Now let's take a look at the option expiration here. because we don't want to be